Hello, and welcome to Smart Mortgage Insights. I'm Mandy LaRose.
And I'm Conor Lavinka. Today, we're going to dive a little bit deeper into gift funds. It's kind of a misnomer in the industry that you need 20% of your own money to put as a down payment on a mortgage. That's really not true. You can actually get a gift. Mandy, can you tell us a little bit more about that?
Absolutely. Well, and guess what? You don't even need 20% down on most any loan. So if you're going to live in the property, you will not need 20% down. But for pretty much every loan that we have out there, there's an opportunity to get gift funds if you're going to own or occupy your property. And when we're talking about gift funds, generally it's going to come from someone it's going to need to come from a family member, like a spouse, a parent, grandparent, brother, sister, aunt, uncle, someone like that. They're case by case. We can look at close friends, but again, that's going to be a case by case situation. So basically, what's going to happen is the gift donor, whoever that's going to be of the family member, is going to gift you X amount of dollars towards your down payment, closing costs, and prepaids. And there's technically no limit on most of the loans that we have for that. There are some loans that require you to have a certain amount of investment into the property. But the nice thing about it is you can get a gift from a family member, and it's a great tool to be able to use to get into a property. As far as being on particular loans, what's required on FHA loans, for example, you can also they have a little bit wider spectrum of who you can get the gift from. You can get it from an employer. You can also get it from a charitable organization. You can also receive it from some down payment assistance as well. So they do allow a little bit more as far as who they allow it to come from. However, on an FHA loan, they do want a little bit more documentation on that. So they are going to require from the gift donor that, and let me back up a little bit on all loans that have gifts. Everyone's going to fill out what we call a gift letter. So the borrower is going to fill it out, the gift donor is going to fill it out, and basically it's going to explain what your relationship is and how much money that the donor is going to be gifting to someone. But on the FHA loan, we're also going to require from the gift donor a copy of their bank statement covering the last 30 days or whatever account this funds came from to show that that money actually came from them. And on all gifts, we're going to need to source that. But FHA, they want to go back at least 30 days with that gift donor to make sure that that came from them. And it's just to make sure that the funds are coming from an acceptable source. We need to make sure that we just need to make sure it's coming from an acceptable source.
Exactly. And we've said the word gift over and over and over again already. And the big significance of that is you cannot pay it back.
Exactly.
It needs to
Yes.
be a true gift. It can't be, oh, well, my mother's going to let me borrow this money and I'm going to keep it and I'm going to pay it back down the road. That is not acceptable with any of the programs. It needs to be a true gift that is not to be repaid.
So that's really why we have to make sure it's acceptable source, because we need to make sure that it's not something that someone went out and got a loan for you in order for you to be able to get this money and then you're going to be paying them back separately. That can't happen when you're dealing with a gift. Another thing that you need to think about on a gift too is as far as what kind of property you're going to be purchasing. Like for example, on a conventional loan, if you're going to be getting a 2 to 4 unit property, so a duplex, a triplex, or a fourplex, where maybe there's more money that's going to be required to be down, or by the way, we do have options to buy a 2 to 4 unit property using conventional financing with just a minimum of 5% down. However, that 5% is going to need to come from you. So that's going to need to be money that you have saved, either in your savings account, you're going to pull from an investment account, you're going to borrow from your 401k, something like that. So we're going to need to show that you have the 5% down. But anything after that can come from an acceptable source as far as a gift goes.
And ultimately, we need to be able to track this. And so for us, we are going to be asking you for a bank statement, a deposit receipt, possibly a copy of the check. Because with all closing, whether it's your own money or gift funds, we need to basically prove where they come from. And so don't be shocked if we ask for a bank statement, a deposit slip, or anything like that. The other thing that you have the option to do is your donor can apply the gift directly to the title company if that makes them more comfortable, or they can send a gift directly to you and then you could put it in your bank statement and ultimately you could transfer that money at the end to the title company.
Absolutely. And like Connor said, they can wire it. They can also get a cashier's check. They can purchase a cashier's check. You get us a copy of that cashier's check. We're going to show that the funds have been put into your account, and that is also an acceptable source as well. But I think that sometimes that's where the biggest issue is some donors have is they're like, why am I giving my bank statement when I'm not getting a loan?
It seems invasive at times, but again, we just have to make sure that it's not been borrowed money from you or the donor. And then we want to make sure that it's not going to be paid back. It's just super important. That's the only reason that we are going to be invasive at
At
times.
that. On a VA loan, you can also get a gift as well. We haven't really covered that, but VA does allow gifts. They have no limits as well. Um, and they're more like the conventional loan. We're going to document that the gift came from the gift donor. However, we're not necessarily going to go back 30 days to show that. Cashier's check work, just a regular check if people still do that. Again, wiring funds to the title company also works as well. Um, One other thing I did wanna mention about gifts, and this kind of surprises some people, is that, the government does charge you a gift tax when you're giving a gift. You can give a gift of, one person, you can give a gift we are not the IRS, so I just wanna say that right away, and we're not tax preparers or anything like that. This is just what the Google says. And we can all find out this information, but you can gift someone up to $18,000 without being taxed on it. So let's say mom and dad want to give a gift to their child. They can each give $18,000 for a total of $36,000 without them having to basically pay a tax on that. So they each can give those that money and not have to pay a tax. You will only pay a tax on the excess above the 18,000. But again, you'll want to contact your tax preparer and they can give you all the details on that as well.
Absolutely. We hope this really helped today. With every program, reach out if you're not sure about a gift. We can tell you the limitations, who is an acceptable donor, and ultimately what documentation needs to take place. But keep that in mind when you need help with a down payment. Always can ask a family member to see if they can help you out.
Absolutely.
Thanks for tuning in, and we'll see you next time. This podcast is sponsored by Residential Mortgage LLC, NMLS numbers 167729, 196 576, and 1820404. Equal housing lender.